Hi, I'm Lindsay Alexander, and this is mybanktracker.com. There is an investment strategy out there which is called the buy and hold. This is when investors purchase stocks and hold on to them for many years. That may be for decades or up until the investor reaches retirement or possibly even later. When you buy stocks with the intention of holding them for decades, you're more likely to stay away from trendy companies or up-and-coming high-risk businesses. And choosing good companies to start with makes a huge difference to your profits. But holding back stock for decades will make for better results for the average investor than trying to day trade without intense knowledge of the market. Take, for example, Warren Buffett. He's listed as the Forbes 2012 World's Billionaire list as the third richest man in the entire world. He relies on a buy and hold strategy for investments, and it can be argued that as an investment strategy, it's one of the best options you have for increasing your wealth over the long term in most every situation. One of the reasons that investors prefer to buy and hold investments is that you can delay the money you would have otherwise paid tax on, while it continues to earn additional money. It's actually enabling you to make money from the money you would have owed in taxes, which further increases your earnings over time. So when should you sell your stocks? Well, if you decide to buy and hold stocks under this investment strategy, you should know when it won't work or when it makes sense to sell the stock you purchased with the initial intent to hold until retirement or later. There are exceptions to every rule, including the buy and hold strategy. There are a few situations when you may decide to sell your stocks rather than hold them. That would be if a company files for bankruptcy, if a CFO gets indicted for accounting problems and theft, or if a company does something that goes against your personal values or beliefs. And when should you not buy and hold? Well, most everyone will benefit from using the buy and hold strategy for investing, but there are certain situations when it may not be your best option. There's a high risk tolerance. Some investors are just a natural born day trader. They have high tolerance for risk. Day traders need to spend a lot of time analyzing and researching the market so they can make their trades in real time at the exact right moment. If this describes you, then the buy and hold strategy is probably not going to satisfy your investment needs. Then there's the professional investor. This is if you spend hours analyzing stocks and the market and have access to the technical information and company data needed to make trading decisions. The buy and hold strategy may not be your go-to investment strategy, but it's been found that even professional money managers are unable to beat stock market index funds over long periods of time. However, if you decide to try other investment strategies, it may pay to have at least a percentage of your money invested in a buy and hold strategy. I'm Lindsay Alexander with mybanktracker.com, and together we're going to build your finances and rebuild the world.